Good afternoon. Hello, everybody, and welcome to the Global Talk. This is the podcast where we dive into the real world stories behind building a global business and bring you key market insights and trends. If this is your first time listening, you are so welcome. If you've been a regular listener of our podcast, then thank you so much for coming back and supporting us once again. If you don't know me, my name is Amy Davies. I am the Managing Director of Workwell Global, and we specialise in supporting businesses expand to international markets by providing employer of record and agent of record services for their contractors and clients. Ultimately, we try to help our clients scale their contract recruitment business quickly and drive ultimate enterprise value to your company. What's even more exciting is just today, we have announced our expansion into Latin America with teams established in both Brazil and Colombia. So for those that are listening who either engage currently contractors or workers in any of the countries in the LATAM region, or maybe you're considering doing that, then please don't hesitate to reach out to me or one of the team for a chat today. Now, as it's January and what has become quite the tradition, we like to kick the year off with looking at key markets for the year ahead with trends and opportunities that you can maximise. And in keeping in with that tradition, today joining me is no stranger to our podcast. And as such, I am delighted to welcome back John Nurthen of SIA. John is the Executive Director of Global Research and heads up the international research arm of SIA. I've heard John speak at numerous events and indeed, as I say, many times before on our show. So John, it's great to have you back and helping us work out what the year ahead holds in store for us all. Hey, John.
Yeah, hi. Good to be here. Here we are again.
Yes, we are. And I still remember our last episode like it was yesterday, and we discussed the Staffing Trends report, and we're going to dig a bit into what we said last year, what's coming up this year. But thank you so much for being here and agreeing to join us and share your knowledge and absolute results from your research. You are quite the draw, I have to say, John. We've had over 580 people register for today's podcast, whether they watch that live or they may watch it back in their own time. But you absolutely are the draw. So no pressure at all for us to deliver a great episode today. So we have got 30 minutes and a lot to work through in that time. We are going to be covering the top markets and some forecasts for this year, along with any key staffing trends generally and globally to be aware of. Now, if anyone has any questions you would like us to answer in today's session, we will do our best to answer them all, but you just need to drop them in the chat function, or if you're watching live on LinkedIn, you can just simply pop a comment below where you are watching us on the screen, and we're going to do our best to answer those without distracting from the agenda that we have set before us. If we don't get enough time to answer your question, we'll come back to you after the episode is finished. But to start us off, it would be great if you can comment in the comment section some of the international markets you are already operating in today and some of the ones that you are most keen to hear about. So you can pop that in now as you're ready. Okay, John, so let's get into today. Now, John, we had a great chat last week and you shared so much information, which I was fascinated by. And we decided together that for today's episode, we would cover off a number of regions and to kickstart the conversation. So we're going to look at USA and Europe in particular, as we know many of our regular listeners operate heavily in our neighbouring regions. And then we're going to share some upcoming countries where the markets are looking particularly opportunistic this next year with some reasons why. And then we're going to round off the session with a view on the staffing and recruitment market as a whole and some of the core themes that are impacting growth and or development. But before we dive into the global markets, it would be remiss of us to not cover our home country of the UK and give the audience just a little bit of a flavour of what's happened this last year, what to expect from this coming year before we move on to those global markets. So, John, thoughts on the UK?
Yeah, it's not the most positive place to start, I'm sorry to say. We had the UK staffing market declining by 4% last year. We do think it's going to get better, but getting to zero this year, and then hopefully improving maybe by 2% in 2027. So it's not the strongest market globally. There are better markets to be in, but like all staffing markets, there are pockets of growth. And I think, a message for anybody on the call, and this applies whether you operate in the UK or anywhere else. I think 2026 is pretty much a replay of 2025. Whatever the business conditions you experienced last year, I'm afraid you're probably going to get the same, which is not great, I realize. But then again, we're all further ahead than we were this time in 2025.
Experienced with this type of market.
Yeah, everybody knows what they're doing. Technology is improved. There's better ways of getting things done. People have trimmed costs appropriately. So, I think everybody is wiser in operating in quite a difficult market. So that's true of the UK, and I say it's true of a lot of the other markets as well.
Definitely. Okay, brilliant. Well, let's start with USA. North America generally, huge staffing market when you look at that global backdrop. And we spoke about the USA quite a lot in this session last year, mainly because the Staffing Trends report had not long been released, and you'd spoken about the lazy W. I remember it quite clearly, so I'd love to hear, did that lazy W play out as we thought it would? If it didn't, why didn't it? And what happened in the US last year?
Yeah, so for those of you not familiar with the lazy W, we spent a lot of the pandemic trying to work out what the type of recovery would be, and there was lots of ideas. People were hoping it would be a V-shaped recovery. Obviously, that's good because you go down, but then you quickly bounce out of it again. Unfortunately, most recessions tend to be a U when you're slightly longer at the bottom, and it transpires. We all know now that the recovery from the pandemic was actually a W. We went down, we got better, and then it declined again, and now we're slowly recovering. So we called it the lazy W because, unfortunately, that last part of the W is not as vertical as we would hope. It's been a slow, painful recovery. I would say that the prediction turned out to be accurate, probably more accurate we would have liked, because the W turned out to be even lazier than we would have hoped. We were hoping, like many others, that the market would improve, particularly in the latter half of the year, and that didn't really transpire. So, as I said, we are pretty much in January 2026 where we were in January 2025.
Yeah, definitely. And I think in previous years when we've discussed the markets, John, we've always looked at the relationship between economic patterns such as GDP, whether there's growth or decline, and in line with what the staffing industry performance might do. Is that still the same, or is that no longer a trusted benchmark?
Yeah, we use GDP in all our country forecasts. It has more of a correlation in some countries than others. Northern Europe, countries like France, Belgium, tends to be very good. If we know what GDP is doing, then we can tell you how fast the staffing market is growing. It's slightly looser in some markets than others. The US, interestingly, it's become more detached. So it is something we still use, but it's not the only thing that we have to look at. And interestingly, what also makes our life more challenging is that if you look at the most recent GDP forecasts for the US, they're all over the place. So got the OECD saying that GDP growth will be 1.7% this year. And then you've got Goldman Sachs saying it's going to be 2.6%. So, I'm looking for sympathy as a forecaster because we're having to deal with a whole range of possibilities. And, you've got the IMF coming up with a different number, and you've got the Federal Reserve coming up from a different number than that. Let's assume the Goldman Sachs are right because they're the most positive. They're saying that, they are expecting for there to be a significant recovery in the first half of this year. It's going to be boosted by tax cuts. It's going to be boosted by the fact that the US government shut down.
Back online almost.
Yeah, so that there are reasons to be positive. We did talk about tariffs and the impact of tariffs. And interestingly, when we spoke last week, was well, it's not turned out as bad as it might have done. So the tariff impact was at the lower end of the range of what damage they might do to the US economy and the global economy. Most economists believe that tariffs are bad.
Yeah.
But And of course, that's all changed this week because we now have the threat of addition.
Last conversation.
We'll have to see how that plays out.
I think it's worth saying that though, that the landscape of the US politically has just been so volatile, and we have seen some of those big decisions made by the government have had an immediate impact on the market. So it absolutely has played into how well some people might, or how well people's businesses might have performed last year versus previous years.
Yeah, it's a big country. It's very different by state. We have a geo atlas where you can actually get good data on the staffing market by metro area and by state. And you can see a huge variance in sort of employment trends, workforce categories from state to state. And legislation varies considerably as well, which makes it very challenging if you're operating across the whole of the US. But I have got one positive bit of news to give you. We will be publishing our weekly SIA Bullhorn indicator later today. And I can tell you that it actually improved by 1%, which may not sound that exciting, but it's the first positive year-over-year increase since November 2024. Wow. So it might be a bit early to break open the champagne yet, because the first few weeks of January are obviously not typical necessarily of the whole year. But that's pretty positive. So if we can get another positive week or two, then hopefully that will start to see momentum improving. And the US staffing market, like all staffing markets, it depends on the segment that you're operating in. Some are better than others. We think all the US segments should hopefully improve this year. There should to be found even in healthcare, which has traditionally dragged back the whole market. There was a huge boom in healthcare staffing during the pandemic, and then that declined quite significantly, which made the whole market down. But we think healthcare will grow 2%. Some of the segments are only growing a little bit. We think industrial and IT will only be growing 1%. But finance and accounting, we've got up 5%, education staffing up 4%. So there's growth to be there. Growth to be
there. And I think you mentioned to me last week when we were talking about this that considering kind of the government's approach, actually government jobs were growing versus manufacturing, which had performed quite weakly, which was the effect of what the government intended.
Yeah, it's rather strange, isn't it? Yeah, the latest US jobs data shows growth in government jobs and decline in manufacturing. So obviously that's
not what Trump wanted, clearly.
The current administration is trying to achieve.
Yeah. And then just last, we've seen a lot about immigration, obviously, in the US. You know, how do you think that's set to impact the market this year, the labour market?
Yeah, well, it's already having an impact. The US relied on immigrant labour, and they've fulfilled a lot of important roles in the staffing market for sure. So yeah, tighter immigration controls is not good for labour supply.
Yeah, absolutely. Okay, brilliant. So let's move on then from the US and start to talk about Europe, which is a bit of a mixed bag, I believe. So do you want to talk us through kind of some of the top performing countries last year, countries that maybe didn't do so well, and then some predictions for this coming year?
Yeah, so the better performing countries in Europe over the last few years have tended to be Southern Europe. So there's Spain and Italy have been the better performing staffing markets. We had Spain growing 8% last year, which is much better than any other European staffing market. We think that's going to cool down a little bit, so we've only got 4% growth this year. Most other markets in Europe are growing at low single digits. As I mentioned, we've got the UK at 0. We've got Germany at 0 as well. Germany has been a challenging market. We had a declining 6% last year, and hopefully it'll get to be flat this year. We'll have to wait and see. France, we've got growing at 1%. Netherlands, we've got growing at 1%. Belgium actually a little bit more positive at 3%. So it's sort of low single digits, nowhere particularly exciting.
Yeah.
If we look at where there's opportunity, I think, as you know, we do a most attractive staffing markets report, which looks at what makes a good staffing market. We look at how big is the market, how fast is it growing, what is the competition like in that particular country, what are the regulations like, what is governance like, is the general economy growing, what's the technology situation like, access to human capital, a whole range of factors. And we still have Spain at number one at the most positive staffing market. We've got Denmark at 2, the Netherlands at 3, Poland at 4. Which should also, because we look at EMEA rather than just Europe, I should give a shout out to United Arab Emirates as well. We do see a lot of interest in the Middle East, United.
We have as well.
In particular.
A lot of interest in the UAE and Saudi Arabia as well, actually. We've seen, I think it's been so much investment there and across the UAE with the 2030 vision, particularly sorry for Saudi Arabia. That's been so much investment. There's just so much opportunity there as well.
Yeah.
Just come back to some of those European countries and in particular Spain. What's really driving the growth in that market?
It's really because it's still got a lot of structural growth. It's one of those markets where the staffing industry is illegal to provide staffing through intermediaries 1990s. So it's a relatively new market. It's not like the UK where it's a very mature market. So there's structural growth there. They obviously had a difficult economic period about a decade ago, but slowly recovered from that. So the economy has been quite buoyant. It's just a generally good economic picture as a whole. And yeah, there's plenty of room for staffing firms to grow.
Yeah, brilliant. We do have a question from one of our audience, actually from Kalpesh. Hi, Kalpesh. Know you well. He's asked if there's any specific trends that is more focused on contract work. So is there anything across Europe where it's mainly focused on that temporary contingent workforce?
Yeah, so I don't know. So, we look at temporary staffing and then we look at contracting as statement of work, and we look at freelancing as well. And there is a lot of interest in other forms of contingent labour, not just temporary agency work. Temporary staffing hasn't been growing particularly well. And therefore, it's not surprising that a number of staffing firms have looked to maximize opportunities in complementary segments.
Yeah.
And it's entirely logical. The same people that are on the database of a staffing firm working as a temporary agency worker, they might be doing some freelance work. They might be doing other forms of project work. So why would you, if you can cut that from the database, why would you not try to offer them different forms of contingent work? So we're actually starting to focus quite a lot on other forms of contingent labour, not just temporary staffing, because of movement in the market. The customers themselves are seemingly more interested, as growing interest in getting people working on a state work basis compared to temporary agency workers. There's more demand in that particular category. So we started to provide more research in that area last year, and we're going to continue to do that this year as well.
Brilliant. Okay, we'll move on then from Europe, just in the essence of time, making the most of what we've got left. So some of the most attractive markets, outside of Europe and North America, where is looking attractive and what are the reasons why?
Yeah, well, maybe if we stick with the Americas, I would highlight in our most attractive report, we've actually got the US in third position. So there are two markets ahead of that. One is Canada, slightly ahead of the US.
Canada's been high for the last few years, hasn't it?
Yeah, it normally comes out a little bit higher. I think it's mainly because it's a smaller market. It's very regional, and it's highly dependent on the energy sector, oil and gas in particular. So it can be a little bit volatile, but it's a less mature market. There's competition is perhaps a little bit easier in Canada, even though I'm sure many Canadian staffing companies who would disagree with that.
Yeah.
But we've got Chile at number one. So there are opportunities in that. Yeah, so it was interesting to hear you talk about how you're launching in in Latin America. We've got Colombia at fourth as well. You'd be pleased to know with the against. We've had Colombia as traditionally high. Brazil is a huge country, huge staffing market potentially. Traditionally, it's had very difficult legislation, which has improved. So it's not quite filled its potential yet. In the same, you've got to believe that Brazil would be a good market in the future.
And I see an article on Brazil actually that was released this week talking about Brazil becoming a hiring hub for America, and some of the reasons why. So if anyone is interested in that, take a look on the SI website for that article.
Yeah, that was published by one of our partners, Martin Padula. Yes, it was a good article. Thanks for highlighting that. And then we've got APAC, of course. And APAC is where you've got the biggest growth. If you look at staffing in China, we've got that growing at 13% this year. India, we've got growing at 12%. So there is double-digit growth in region markets. Some of the other Asian markets are pretty strong. We've got Indonesia as the most positive market. There's a sort of booming economy there, so plenty of opportunities. And when we look at the way that we rate countries, Indonesia is generally good across all the criteria that we mark. But there's other good opportunities in other parts of Asia as well, places like Taiwan, Vietnam, South Korea.
Yeah, brilliant. And just in terms of Asia in particular, obviously we spoke about Japan as being quite a robust market, hasn't it, over the last number of years? And it's often quite overlooked actually on the global stage, given it's the second largest market. But I don't think the economy is looking too great for Japan in this next year, is it? So is there anything our audience might be interested to hear on Japan?
Yeah, so we don't think Japan is necessarily the best market this year, but it's not bad. It's better than most of Europe, and it has been very strong. So those of you who get our Global Daily News will see Japanese staffing firms. There are many listed staffing firms in Japan. They generally have positive results in contrast to when we're publishing European results or North American results, sadly. So Japan has been a very strong market. Like Spain, it is an immature market. Like Spain, it only regulated temporary staffing in the 1990s, so there is structural growth there. And it continues to be a very strong market. The other thing I'd highlight as well, one of the new products that we launched just before Christmas was a Valuation Explorer. And it's a database which gives you a live feed of share prices and a range of different multiples, price earnings, various multiples. It's a live feed across all listed firms in the ecosystem. And you can look at all listed staffing firms and what investors find attractive. And it's three things you can see that investors like where they award a high multiple to a staffing firm is that they're in professional staffing. Secondly, they're listed in Japan. So all the Japanese staffing firms are more highly rated than European or North American staffing firms. For some reason, Japanese investors like staffing more than European or American investors.
Okay.
And part of that might be, Recruit is a very successful story out in Japan. Successful staffing firm that operate Indeed. I think the value of that business, in terms of market cap, it's a company that's got much stronger market cap than the Deco, Manpower, Ransom. And, part of that business is they've managed to persuade investors that they're a technology business rather than a staffing business. And I think, when you look at the strategy of some of the biggest staffing firms, that hasn't gone unnoticed. Positions that are being made across the ecosystem. It used to be the case that staffing firms acquired other staffing firms. Now, firms are made the talent acquisition technology. Some are doing it more successfully than others.
Definitely. There's definitely been a shift there. It's probably a nice segue, really, if we just step aside now from kind of a regional view and talk more about the overall kinds of trends that are impacting global staffing and recruitment. I know you have your staffing trends report that is released this month, so we'll talk about that towards the end. But what are some of the key themes that we might find in that report, John, that you'd want to share with our audience today?
Yeah, I think one of the main things we talk about is the post-COVID
Yeah.
market. Now, is the staffing market in 2026 different from the staffing market in 2019? And I think to recognize it's actually very different in other important ways.
Yeah.
So during COVID, we had the so-called Great Resignation, where people left the workforce, they decided to retire early, and then following that, we had the so-called Great Stay, where employers are being compelled to pay their staff a little bit more to stick around. They've been more focused on making sure they retain employees. At the same time, employees have been a little bit more reluctant to move around. And to make a good staffing market, you actually need labour churn. It's no point looking at unemployment figures. What staffing firms do is find jobs for people already in jobs, by and large. So you need people to move around, and there hasn't been a lot of moving around, unfortunately. Then we've seen the growth of remote working. Obviously, that's dropped back a bit
Yeah.
since the height of the pandemic, but it's still much higher than it was in 2019. So that applies to temporary workers working remotely.
Yeah.
It's the staffing firms and the way that their staff are working as well. Then we've got the whole digital disruption piece, which we could spend an hour talking about that alone. The impact of AI, other tech on the workforce. Still uncertainty there. There's positives and negatives to come out of it,
Mm.
and everybody's still trying to grapple with what that actually means for the labour market. We've got the continuation of the aging population, demographic issues don't get any better, particularly in Southern Europe and places like Germany, in Japan as well. They're going to struggle there. Then we've got geopolitical risks, which we don't need to go into huge detail, but clearly there's a number of difficult situations around the world, which uh,
They're unpredictable.
as you all higher risks, there it's there is having an impact across all sorts of economies in different ways. The trade wars as well, which we've just mentioned at the beginning, which unfortunately may seem like they may be about to get a little bit worse.
Mm.
But importantly, there's also a much more diversified ecosystem. So if you think that staffing firms are competing against a number of other ways that an employer might source talent, so employers can do it themselves. In fact, they much prefer to do it themselves. Why would you pay an intermediary to do something if you can do it yourself? So if you're trying to fill a vacancy or find somebody for a temporary position, you'd much prefer to do it internally. You promote somebody, you use an employee referral program if you can. You can try and build your own talent pool. Now, those things existed before the pandemic, but what's different now is that there is technology that's much better to facilitate those sorts of processes.
Mhm.
Employee referral programs used to be a little sort of disorganized within companies. Somebody in HR would occasionally send around an email reminding people they would get a fee if they recommended a friend. But now there are entire AI-enabled platforms that facilitate that process. So all these processes have been improved. At the same time, staffing firms are competing against other intermediaries like job boards, like talent platforms where you can get freelancers. Well, guess what? They've all been improved by technology as well. So the cool thing for staffing firms is those other ways of that clients might use to source labour have improved. Of course, staff firms have improved as well over that period, but nevertheless, they're challenged to compete with some of these other ways of sourcing talent.
Yeah, absolutely. It's a key topic. I mean, we've just got one question from James. Hi, James. And he's seeing so James is CEO of TRN, so he speaks to many staffing firms, and they're seeing a big trend and increase in international organizations asking recruitment businesses to help them recruit and settle centers of talent outside the US and also the UK. So in Portugal, for example, is that something that you're seeing, John, in research that you could comment on?
Yeah, it's interesting. So, yeah, hello, James. I think staffing. Uh, the US economy is somewhat constrained at the moment by the immigration issue that we talked about. I think there's a trend for firms to outsource. So they're tapping into lower cost labor markets. So I don't know if that's what you're referring to, James, where, they're actually outsourcing labor to Portugal rather than bringing Portuguese workers into the US, which of course is much more difficult. But I think people are aware we actually provide services to a lot of large employers as well globally. And certainly for them, we see a lot of interest in tapping into talent in some of the lower cost labor markets. And Portugal, that James highlights, is a very good example, highly educated workforce. And you can certainly find yourself some cost effective workers there compared to workers in Northern Europe and North America.
Yeah, perfect. We have actually run to time. I can't believe it. But for our audience listening, I do just want to say there's a lot we actually haven't covered in terms of those global trends. So the first thing I could recommend that you do after today is keep your eye out on the SIA website. The Global Staffing Trends report that John has written is going to be released this month, potentially next week, we think. And it's a free downloadable report, so you don't need to be a member of the SIA to access it. And it is the SIA's most downloaded report in previous years, so it's absolutely a popular one. So to really dig in deeper to some of the themes, really, that we've only been able to scratch the surface on today, please do take a look at that report and download it. I absolutely recommend it for everybody listening today. John, thank you so much. That was honestly a brilliant conversation. So much is, I think, for the audience, new information that actually gives them a starting point of anything else that they may want to investigate. So thank you so much for joining us. For anyone else who likes to get involved in other SIA kinds of events or activities, these guys do have their executive forum for North America coming up in March, which is in Boston, where we have an office. So I'm sure that's a great location for that event. And you can find details of that event if you want to attend on their website as well. But that is a wrap on today's session. If you're excited by what you've heard, you want to understand more, please do not hesitate to reach out to John directly or download that Staffing Trends report, or you can reach out to me. I'd be more than happy to have a call with anyone who wants to talk about international market growth and opportunity. There will be a QR code at the end of the episode, so if you do want to book that in, you can just scan that. Otherwise, thank you for joining us today. We will release this after we finish, so if you haven't been able to watch it live, you can watch it back. But thank you again, John, and thank you everyone for listening.
Thank you.